This is something entirely different. What happens here, and I hate to use words, and I don't mean this hyperbolically at all, but that this invokes risk of World War III, of a truly global conflict that could be much, much worse than anything that we've seen so far.
Hello, I'm Michelle Makori. Thank you for joining us. Middle East tensions are escalating, but markets are keeping their cool for now, waiting to see Israel's response to Iran's attack on Israel this weekend. Iran launched an unprecedented assault against Israel in which it fired some 350 ballistic missiles, cruise missiles, and drones on Saturday night, 99% of which were successfully intercepted. Israel's war cabinet has held a few meetings but has not said how the country would respond. Now, Iran usually attacks Israel via its terrorist proxies, but this is the first direct attack on Israel from Iranian territory. Most of the drones and missiles were intercepted by Israeli, US, British, French, Jordanian, and Saudi forces, and the attack left limited damage thanks to that coordinated response. There were no fatalities, but a 10-year-old girl was severely injured by shrapnel. Now, Iran said that the attack was in response to a suspected Israeli strike in Syria that killed top members of the Iranian Revolutionary Guard, or IRGC, designated a terrorist group by the Trump administration in 2019. Now, the Biden administration and several other Western countries are urging Netanyahu's government not to rush into a retaliation against Iran and to be cautious in its response. President Biden also reportedly told Israel's Prime Minister Benjamin Netanyahu that the U.S. would not help in an offensive against Iran. Israel has pledged that it will exact a price from Iran. Let's get some analysis on what we can expect next and what this means for the markets, including for gold, oil, Bitcoin, and more, with macroeconomic and geopolitical expert Michael Wilkerson. Michael is the founder of Stormwall Advisors and the author of the recently published book, Why America Matters, The Case for a New Exceptionalism. Michael, good to have you back with us.
Hello, Michelle. Always great to be with you.
All right. So, Michael, as we know, the Islamic regime of Iran has long been calling to wipe Israel off the map. Nothing new here, and has attacked Israel through its proxies like Hamas and Hezbollah. But this was a first attack on Israeli soil directly launched from Iran. Now, you could say that this attack was expected. They did telegraph that they were going to retaliate to what they say was an Israeli strike in Damascus. But before we get into Israel's response and what we can expect from the markets here, what is your overall reaction to this unprecedented assault by Iran?
Michelle, I think this is a very dangerous move up the escalation ladder here. I've been talking about it, warning about it. Others have been talking about it, warning about it for the last couple of years. But what is happening now, as you point out, is a new level, and it's a new phase. And we've greatly increased the danger of a broadening conflagration in the world, in the Middle East. You know, we've already seen that in Ukraine, Russia-Ukraine conflict has risk of widening outward to involve NATO nations, with France and others making threats, etc. But this is something entirely different. What happens here, and I hate to use words, and I don't mean this hyperbolically at all, but that this invokes risk of World War III, of a truly global conflict that could be much, much worse than anything that we've seen so far. Now, you mentioned something at the beginning, which is this is not necessarily surprising in terms of, well, let's take Iran's animosity towards Israel. They've determined and declared that Israel is the enemy of the state, of the Iranian Islamic State. They have given it the name the Little Satan. The U.S. is the Big Satan. And I think it's important, perhaps, maybe to start with a little bit of the history here. You know, prior to the 1970s, Iran was a key ally of the U.S. That all shifted in the 1970s with the overthrow of the Shah of Iran, with the establishment of an Islamicist government, radical government, which has persisted for nearly, well, over 4 years, nearly 50 years now, to lead a country that really has two governments. The secular government with Ibrahim Raisi as president of Iran, but the true power lies with the clerics and with the supreme cleric, the Ayatollah Ali Khamenei, who took over for Ayatollah Khomeini many years ago, but that has continued to lead what is really a radicalized government in Iran, whose purpose is towards Israel is essentially of a religious and apocalyptic nature. This radical view believes that Israel has no right to exist, that in order to bring in the new epoch of Islamic rule globally, and the Mahdi, the 12th and final Imam, that Israel has to be defeated, and that Iran and other Islamic allies need to take the lead in order to usher in this apocalyptic future. Now, this isn't something that we talk about a lot in the West, or certainly not in the media. But I believe without understanding this motive force, it's very difficult to comprehend the nature of what Iran is doing. This isn't purely geopolitical. It is, of course. It is about influence in the region. It's about the sanctions regime that Iran has been under from the U.S. and others for a long time. But there's something deeper here, and it's something that is fundamentalist. In other words, this is part of the radicalized nature of that government. And until that changes, we have no real reason to expect that Iran will come to the negotiating table with Israel in any real or substantive way. What we saw under the Trump administration was a hardening of the views, enforcing stronger sanctions. Iran has been under some form of sanctions or another since the 1970s. But President Trump got quite a bit tougher with the Iranian regime. We saw that in increased sanctions. We saw that in ending the Iran nuclear deal. We saw it in targeted actions towards leaders like General Soleimani, who were deemed to be leaders of the terrorist effort against Israel and otherwise. And we have absolutely seen a softening of this stance under the Biden administration. In my view, there is no doubt that Iran is being tactical, being clever about timing here, not wanting to risk waiting until a new administration comes in next year, seeing this as a moment of opportunity at a time of weakness, where the Biden administration has proven time and time again to not be on their A game in terms of dealing with these geopolitical crises, whether it was in the context of Ukraine, whether it was in the context of the U.S. withdrawal from Afghanistan, where both Presidents Obama and Trump determined that that would be a disaster, and ultimately, though they both intended and wanted to, made a clear decision to not leave because they needed to maintain some order. And we're seeing a repeat of that in terms of the engagement around Hamas and Israel. So I fear that the U.S. does not have the will or the tools in hand to be able to deal with this in a way that will actually fundamentally change it. What we don't know, of course, is what's going to happen next. We've seen some measure of restraint on Israel's part so far, and, of course, a coordinated effort from the U.S. and other allies that ensured that this broad-based terrorist attack of missiles and drones was essentially ineffectual. The vast majority, some 98, 99% of those missiles and drones were intercepted and shot down. But we've only just begun. And I go back to where I started, that we have now entered or climbed up the escalation ladder to a much, much more dangerous level.
Yeah, we've only just begun. And as you pointed out, this is an ideological conflict for the Islamic regime of Iran, which has long stated its very clear intention to wipe Israel off the map. Also important to distinguish, though, quickly, Michael, between the Iranian people and the Islamic regime, because within Iran, there is a lot of conflict between the more secular people of Iran and the Islamic regime, which have been oppressed by the Islamic regime. When we give a little bit of context here, just wanted to point that out. I do want to touch on one thing that was quite unusual in this attack, and that we had the likes of Jordan and Saudi Arabia assisting Israel here in thwarting the projectiles, the drones, the missiles coming towards Israel. What do you make of that assistance?
Well, again, I give credit to President Trump and the Trump administration. What was initiated with the Abraham Accords in bringing some dialogue, some rapprochement with Israel and countries in the Middle East, and what was we had hoped would continue beyond that until the Hamas terrorist attacks of November 7th, with further advances with Egypt, etc. I think that was a fundamentally important move to enable greater coordination amongst the regional powers. Secondly, the U.S. military moved Israel from European command to CENTCOM to the Central Command, which brought it into greater Israeli affairs and a greater coordination with what the U.S. was doing in other parts of the world. So really foundational steps that were put in place under the Trump administration that we're now seeing the benefit from here in how Israel was able to coordinate with the U.S. and with its neighbors.
Right. And as you mentioned, there's been some perceived weakness of the Biden administration on the world stage, and the Biden administration, though, stepping up and arguably helping Israel in this particular attack on the same side of that coin has been giving Iran billions of dollars, which has facilitated this attack, as well as some by its proxy terrorist groups. But the question, Michael, remains right now is what we can expect from Israel in terms of a response.
And before we move on, just to say one thing on what you've just described, which I think is absolutely right, but this is also an example of Iran testing the perimeters. How far can they go? How effective was the missile defense? Turned out to be quite effective. How good is the coordination? What will the U.S. do to step in? So we spoke of the perceived weakness, but this really was an example of the opportunity to test it. Mm-hmm. So now to your question, what happens next?
Actually, we're on the point, seeing as you've raised this, because some have said that this was a very clearly telegraphed attack. There have even been reports that Iran gave the U.S. 2 days notice that this attack was going to happen. They launched these slow-moving drones as the first line, which sort of is very easy to signal a bigger attack is coming and to get positions in place. What do you make of the fact that, Iran was choreographing, if you will, an attack with a relative broad range of notice?
Yeah. I think they appreciate the Iranian officials appreciate, both military and civilian, appreciate that they're playing an extremely dangerous game. They are taking big risks here in what they've done. And so I go back to what I just said, which is, I don't believe, however, that this is purely symbolic. I do believe that they are testing response, testing the perimeter, so to speak, to try to understand how Israel will respond, how the U.S. will respond, how these other nations will respond, and to learn from this opportunity. So I think they're doing a couple of things. One, they're trying to do the best they can to limit what could be a very chaotic and dangerous situation, and learn along the way. So I think it is more than symbolic, but to your point, this was not a surprise or sneak attack. Media was covering this very carefully all of last week. We saw gold run, I believe, in my view, largely on concerns around an escalation in the conflict. We can talk about gold a little bit later, but you're right. There was a lot of signaling going on here about what was going to happen.
Right, and we definitely want to touch on gold and the market's reaction. But so far, it seems that it's quite muted. And the assumption, I would think, that Israel will show restraint or not retaliate. Now, we did hear from Israel's defense minister, Yoav Gallant, saying, that Israel had thwarted this attack, but that they're prepared for every scenario. Prime Minister Netanyahu earlier on had said, we've intercepted, we've contained, together we shall win. We also heard from Gallant saying that you can't send a message that it's okay to send over 300 missiles and drones at Israel, and that they will show a force to show further deterrence here. Israel's war cabinet has been figuring out a way to respond to this. One of the members of that cabinet, Benny Gantz, saying that this event is not over and that there will be some kind of price for this attack. So again, the markets, seeing as you touched on it, are reacting in a way that they do not think that this kind of retaliation from Israel will be dramatic or that it'll be anytime soon. What's your read on that?
Two different things. One, the market has been blissfully ignoring almost every event of the past year. The expectations for a soft landing, I wrote an article a bit ago called "A Soft Landing is a Fairy Tale," and sort of just parsed some of the suspension of belief that you have to believe that you could get a soft landing in this environment. That's where the market is today. The market has hands over eyes, hands covering ears, not willing to really measure the consequences of this. We saw a little bit of it last week, but to your point, we're now sitting here on the Monday after the attacks. The markets have largely shrugged their shoulders. So that's the market side. Now, gold, we can talk about, come back to that in a second. The markets are hoping against hope that there is a massive response, that whatever Israel does is, whatever words you'd like to use, proportionate or prudent in the context of the circumstances. I'm not sure what that means exactly. So that's the market. On the other hand, I think the markets and potentially government leaders are greatly underestimating the risks of a 1914 type of event. What do I mean by that? Well, what's been famously called the sleepwalking into war, that these events that occurred in 1914 and that we have seen happening in the last couple of years, we just keep blindly moving forward into a worse and worse situation. Again, ratcheting up on the escalation ladder. And at some point, events become uncontrollable, out of control of markets, certainly, but of governments, of militaries. And we find ourselves in a very, very difficult situation from which to extract ourselves or anyone else in the region.
Okay, so back to the options for an Israeli response. What do you expect when you say proportional? I mean, Israel has typically targeted specific facilities, military facilities, allegedly. Israel has allegedly targeted lead members of Iran's Revolutionary Guard, as I said, designated a terrorist organization under the Trump administration. Israel has traditionally taken out people essential to Iran's nuclear program, which we must also remember is being actively developed as we speak. What kind of response do you expect from Israel?
Well, obviously, I don't know what they're planning. I think, just as I mentioned, that even Iran, who's initiating these attacks, their leadership has had to be very careful about what they've done and how they would do it so that they don't find themselves in a chaos of their own making. Israel as well has to be very careful that they don't propel themselves and the world further into the vortex here of a much broader war. On the other hand, it is clear that Israel will have to respond. They will have to defend themselves and their ongoing right to exist, which is under challenge every single day. And so I do believe that we will have to see, that we will see Israel respond. I think right now what they're trying to do is get the U.S. and others to come along with them with whatever they intend to do. There's going to be some debate there because it is clear the U.S. Biden administration has already signaled that they do not want Israel to or would not participate in an offensive action against Iran. I don't know what offensive means in this context of being rained down upon by missiles, but Israel is going to have to take action. I think looking to the past, looking to the precedents of what have they done in other situations, what is different here is that this is no longer being done by proxies where there's some plausible deniability. The Iranian government owns this. The missiles were launched from their territory. This is clearly official action, which is something new in the world, at least in current history. And so I think that while I have no idea what they will do, that Israel's response is going to be heavy and strong and severe, and that therefore I am not particularly optimistic that this is going to end quickly, easily, or well, but rather that we're going to see further escalation here and increasing conflict that begins to mushroom out of this situation.
I mean, Michael, we have to keep in mind that, of course, Israel is currently still engaged against Hamas, another one of Iran's terrorist proxies in Gaza. And that situation has been going on for a far longer time with far more casualties than the Biden administration would have liked. Israel, of course, has made several offers to get the hostages released, all been rejected by Hamas, and Israel still also getting regular bombardment from another Iranian proxy, Hezbollah, firing at Israel from the north, from Lebanon. So when Israel is calculating a response, I mean, surely it's got its hands quite full with these other fronts.
Yes, absolutely. And moreover, the challenge is that Israel is dependent on the United States, both financially, certainly militarily, armaments, and goodwill, all of which have finite limits. Think about the dollar value of the missiles launched and the defense systems that were activated. This war is always inflationary, but this is at some point going to test the limits of Israel's capabilities, test the limits of the U.S.'s goodwill and willingness to continue to fund it. We've already seen this, of course, in the battle in Congress over Ukrainian funding for Israel, et cetera. But we collectively just burned through what probably was hundreds of millions of dollars just in a few hours. And it's a small example, but this is going to fuel further inflation here, and continue to raise a lot of debate and discussion in the halls of Congress around where the limits are.
Right. Before we go back to the conflict at large, let's bring it into what we're seeing in terms of market reaction right now. As we've said, equity markets largely shrugged it off. What do you make in terms of what we've seen in terms of the way gold has reacted? I mean, gold has been hitting new all-time highs, rising above 2,400 on Friday. Now it's just above $2,350 an ounce. So did not react. Well, it didn't rally after news of this attack when markets opened on Monday. Is that surprising to you?
No, only in the buy the rumor, sell the news aspect, in that I think the markets were anticipating it. By background, and I think your viewers will know this, but it is rather a dramatic move for gold, which doesn't tend to, it's not Bitcoin, it's not crypto, it doesn't tend to have these very violent moves to the upside the way it did in the past week. Think about what's happened just year to date. We've seen 6.5 billion of outflows from gold ETFs at the same time that we were seeing 12.5 billion go into Bitcoin ETFs following the approval end of January. So it's not retail buying gold. Although on the other hand, Costco launched its gold bullion sales, coin sales, I should say, in its stores and online October of 2023. They're selling, in one analyst estimate, up to $200 million, ounces, up to 100 million ounces, 100,000 ounces a month. So over $1 billion since then that has gone into the hands of retail buyers who would prefer to hold their own gold rather than have them in the banking system or otherwise. There's been a lot of talk about, well, we know that the central banks have been buying gold. We know China has been on an 18-month buying spree, even on the data that they admit. Russia, India, others. We saw Zimbabwe just announce a new currency. I think their 8th or 9th attempt at currency reform. This one backed by gold. So without doubt, there is central buying going on. That would explain a slow and steady rise over the past 2-3 years as this buying has really ramped up. We've not seen that. In fact, we've seen a lot of ups and downs during that time. So while that is absolutely a trend, we know that global demand for gold is essentially flat. It was down 5% last year, excluding OTC. Maybe the OTC buying offset that. Nonetheless, it's neither sort of traditional supply or demand that's shifting it. It's probably not the central banks. It's all happened out of the 14% rise that's occurred year to date for gold. 9% or 10% of it happened over the course of just a few days last week and the week before. So that tells me that there is something else going on, whether psychology or otherwise. And I attribute it to three things, really. Inflation. So we saw the inflation news come back in last week, CPI printing at 3.5 headline, 3.8 core, which basically tells the world what we have been talking about on your show, and I've been talking about a long time, which is that inflation is not going to go away. It is not transitory. It's not going to pass. But we've entered a phase of persistent inflation in the United States, number one. Number two was this increasing concern around the potential for conflict with Iran last week. So that's the buy the rumor. And then on the news, there hasn't been a whole lot of movement, although gold has certainly held up its value today. Finally, with those two themes, inflation plus war, ultimately that leads to debasement, both of currency and of sort of society and social constructs. But over the course of the past 2 years, and I'm sure you've noticed this on your show with some of your other guests, that increasingly it is becoming clear that while no one can predict the timing, this eventual credit crunch, U.S. government credit crunch, collapse, whatever you want to call it, is closer than it ever was. Whether it's imminent this year, no one knows, and I'm certainly not going to try to predict it, but you can tell that it's closer than it has ever been before, with debt at $34.5 trillion, with deficits running, again, this year, $1.8 trillion. We're piling on debt, as you know, at $1 trillion every 100 days, which has now become a meme of its own. But it's a meme because it's true, it's broadly true, and everyone knows it. So I think when I said that something is shifting in market psychology, inflation, war, and fears of debasement are all playing into what has happened, in my view, in gold in the last 10 days or so.
Right. As you said, themes that we've covered extensively here on Kitco with you as well as with other guests. But in terms of gold's role as a geopolitical safe haven, I mean, it seems to me as though things are certainly not any safer on the geopolitical front than they were last week. On the contrary, I would say otherwise. Is it surprising that people aren't factoring in the concern of this very real escalation into the gold price right now?
Great question, because what was implicit in what I was saying, but you said explicitly, is that gold is the safe haven asset in times of war. Always has been. And what the market is signaling to a keen observer, like your viewers, your listeners who understand this, is that this is a terrible signal, geopolitically. It is signaling that something dangerous is on the horizon. And we've said it already in this discussion around the risk of further escalation of what we're seeing and moving even further into the vortex of a broader war. The gold prices here could be the canary in the coal mine, warning markets, warning governments, warning investors that we are on the cusp of something much more dangerous than what we've seen today. Which
again, I mean, begs the question. I would think that coming off this weekend, at least on the retail side, people are going, time to stock up on gold, because this conflict is showing signs that it can only escalate further. And we're not seeing that. What development do you think sparks that panic move into gold, at least from the retail side?
Yeah, I think we saw a bit of it last week. So again, I think today it's almost too early to tell, because what we're seeing happening in gold is that it's holding. As you pointed out, it hit an intraday high on Friday of, I believe, 24.44, something like that. Kind of closed out 23.60. It is holding there, or slightly above that right now. I think if we saw another surprise or shock piece of news that hasn't been factored in, that could be the next catalyst here. So, for example, a response from Israel that is perceived as destabilizing or not proportional or not in line with what the markets were expecting, you could see it again. We don't, of course, know what is going on. I gave the example earlier that retail buyers seem to be shifting from ETFs into other formats, whether online through the online dealers or now at retail through Costco, is signaling something about how retail is looking at gold as a safe haven from inflation and in times of chaos as an alternative money.
Yeah. Do you have a forecast then for gold as this situation continues to develop?
I have said for a long time that I continue to believe that gold is undervalued as an asset, as a store of value, as a monetary premium. I see no reason why gold this year wouldn't be at $3,000 an ounce or above. I think there's an argument to be made it could go even higher, but in my view, in light of everything that's happening, 2,400 does not yet represent fair value. You know my views on inflation, Michelle. You know that I believe that the monetary expansion of the past 15 years or so, since the global financial crisis and through COVID tripling the money supply, including 40% over 2 years, this is not fully baked into inflation yet. There's always a lag between that monetary expansion and when prices start to catch up. But that is what real inflation is, and eventually it will. And what is happening psychologically, I believe, with consumers and retail investors is an awareness that we are not getting out of this inflationary pit. So I believe that gold will continue to reflect that the demand will increase. We talked about a potential catalyst, but I don't see a lot of downside risk. Of course, things can move up and down, other than, and we've talked about before, the potential for manipulation of the gold price in the derivatives market, and otherwise it doesn't quite factor into what happens at spot or OTC, which I do believe is a factor, and it depends on where the forces lie here on that issue of the gold derivatives market and who benefits.
Right. So too many factors supporting gold at this level. At the very least, you don't really see it moving much to the downside. Mike, we have a lot of guests on the show that say you do not want $5,000 gold. When gold spikes to that level, that means things are very, very, very bad in the world, and you do not actually want the scenario that causes gold to pop up to such a dramatic level. It is up about 14.2% year to date, but you're safe saying you do not expect it dropping much below what level?
Well, I certainly could see it moving by a couple $100 to the downside, but just like my views on Bitcoin, I believe that any pullback like that in this environment, given the long-term challenges that we're facing, given the long-term trends for inflation, what I've called before the deficit debt inflation doom loop we've now entered into, we're not getting out of that. So whether there be short-term price movements up or down for gold, for Bitcoin, for similar assets, for oil, for the oil energy complex commodities, I think long-term, medium to long-term, I remain very, very positive.
I definitely want to get your thoughts on Bitcoin as well, but let's talk about oil. Because another surprise is that oil prices will lower after Iran's attack on Israel. WTI crude oil down about 1% on the day so far at around $84.55. What do you make of that? I mean, oil has had a rally, but what do you make of the fact that there's a pullback, slight, but a pullback today?
Yeah, so we had the rally, as we were talking about for gold, this sort of longer increase over the past few weeks. There's been a lot of market movement. There's been a lot of shorting of the energy complex, which did not go well into Friday. So I think we see again an example of buying the rumor, selling the news a bit. There is some hope, I think misplaced hope, that cooler heads will prevail and we will not see the kind of scenario that I painted earlier, but rather some sort of de-escalation. I, again, don't look to one day because I don't believe that the pullback in prices today really reflects the reality of the market. For oil, I could see another type of event like this, not even a cataclysm, but other supply constraints. We've seen Russian refineries coming offline through drone attacks. Something else of medium magnitude even would be enough to chase oil much higher, including well above $100. That's not necessarily my base case, but I do believe it's certainly not more than a standard deviation away from a plausible outcome here to see us back into a triple-digit number as a result. So, notwithstanding being off a bit today, 1%, I'm still long gold.
Oil and gold, but yes, but $100 oil, not that implausible. And if this scenario continues to escalate, so of course, what would that mean for the Fed, which is, as we are seeing, fighting inflation, which is proving to be stickier than anticipated, at least by the Fed, not by you. You warned us that inflation wasn't going on anywhere. What does this mean in terms of the prospects of a rate cut by the Fed?
Well, the prospects have certainly diminished. I think the market was way ahead of where the Fed actually was in terms of the dot plot and where expectations were around rate cuts in 2024. March's CPI data and PPI data makes it much more difficult to envision rate cuts this year. It's interesting, even though at 5.5%, we have the highest rates that we've seen anywhere in this cycle. Financial conditions are actually still more on the easing side than the tightening side, and still fairly accommodative. And I think one of the things that the Fed is learning is that their tools are not very effective in this environment. In other words, this has not been inflation driven by a monetary expansion in the banks, but really driven by fiscal spending, by government deficits. And it's turning out that interest rates are not terribly effective when fiscal deficits are part of the big driver, in addition to the monetary forces behind inflation. And I think the risk here is the Fed realizes that they don't have a lot of power in interest rates to bring inflation down. At the same time, that the cost to the government of carrying this debt becomes very problematic. So now we see that the U.S. government debt, the debt service costs are annualizing at $1.1 trillion a year on an annualized basis. And my concern is that at some point we enter a period of fiscal dominance where the central bank, whether it's independent today or not, becomes less relevant when you consider that it would not be independent in an environment where, in order to keep the U.S. government debt from spiraling completely out of control, interest rates have to be suppressed. And while the market might say that's a good thing, it's a little bit like your point around gold going to $5,000. If interest rates are being suppressed for that reason, inflation is going to run. As the largest debtor, the U.S. government has reasons to favor that kind of outcome. But of course, it's very difficult for households and for a lot of businesses to live in that environment. So I do see a return to some form of quantitative easing in a moment of crisis, whether that be through yield curve control, through programs like we've seen with the Bank Term Funding Program or otherwise. But all of these things are in the very limited toolbox that the Fed has. And as I've consistently said, I think we're going to end up watching the government err on the side of allowing inflation to run too hot, because it simply cannot allow the other consequence of killing the economy, of letting the debt spiral out of control, et cetera. So they will use inflation as a way to debase the debt.
Right. A theme that we've covered extensively, which of course is one of the cases for gold, and some would say one of the cases for Bitcoin. So let's touch on Bitcoin, because Bitcoin is also supposed to be a safe haven asset, which Bitcoin proponents say it should function like a gold as a geopolitical safe haven. We saw Bitcoin drop around 7% after Iran's attack, after news of that broke out. We saw similar reaction from Bitcoin when the October 7th attacks by Hamas into Israel happened. So Bitcoin hasn't really been coming through as a geopolitical safe haven at least in terms of initial price movements. Bitcoin is now at about $64,000 per coin. Year to date, it's still up about 52%. Of course, there are other factors involved with Bitcoin, like the halving coming up expected later this week, which is expected to which will reduce supply of Bitcoin and should in the long term be a positive for the price. But what are your thoughts on how we're seeing Bitcoin move here?
Well, you mentioned the halving. So that's yet another example of buying the rumor, selling the news. I think a lot of that has already been priced in. You also have a lot of old hands who have been holding onto their Bitcoin for a very long time, looking for moments to sell. And then, of course, when there's bad news in the environment, maybe they feel more pressured to kind of make those sell trades more quickly. And there may have been some of that going on towards the end of the week and over the weekend and into today. The challenge with Bitcoin as a store of value, and I'm bullish on Bitcoin and bullish on it as a store of value, but in order for money to be good money, it needs to be a stable store of value. And the volatility that Bitcoin has exhibited continues to illustrate that we're not quite there yet. We're not anywhere near maturity for Bitcoin. Unlike gold, which has been around for thousands of years as a store of value and a medium of exchange, right, Bitcoin is still in its immaturity. I don't believe that we've come anywhere near sort of Bitcoin's fully realized value, where it has a monetary premium, where it can end up in a more stable place. So unfortunately, while I am bullish on Bitcoin and I do see it as a store of value, it's not a stable store of value, which means it's not hard money or good money yet. I do think it has potential to be that over time. And unfortunately, I think it's going to result in some continued volatility. Having said that, and I've said this recently, I am bullish enough on Bitcoin to believe that there's no reason that we couldn't see a Bitcoin hit $100,000 or more by the end of 2024. We were wherever we were, 72,000 or so, a bit back. We've now pulled off quite a bit, but this doesn't feel like we're anywhere near the end of the Bitcoin bull run or cycle. We've got a long ways to go, and I think 100,000 is a nice round target. It's not terribly precise, but I see no reason why Bitcoin couldn't be there before we close out this year.
I mean, another factor is a potential spot Bitcoin ETF opening up in some Asian markets. That's expected sometime soon. What is the likelihood, though, of some diplomatic de-escalation here, sort of calming things down if there is broad support for Israel? And we're getting an update that, at least in terms of a G7 response, they're now looking at new sanctions on Iran following the attack, saying much of the world today is standing with Israel. At least that's according to White House spokesperson John Kirby. Is there a likelihood, Michael, that this does get, pushed further down the road? I get that ideologically, this is a conflict that ultimately will probably heat up to a very dramatic level. But in terms of a near-term sort of a development, do you see this being pushed further down the road? Keeping in mind also the fact that you said that this is a prime opportunity to attack if you were Iran, if you really wanted to ratchet things up before you have a new administration in place.
Yeah, and I think this goes back to the beginning of our conversation when we talked about the loss of U.S. prestige and credibility geopolitically and diplomatically over the past 3 years of the Biden administration. We have been repeatedly snubbed by adversaries and former allies alike in these contexts. And unfortunately, in this environment, with this administration, we are not going to have a strong hand diplomatically. Whenever I hear the White House now talk about new sanctions, I just roll my eyes, because if we've proven anything through the Russia-Ukraine conflict, is that sanctions are not very effective in terms of accomplishing their overall objectives. You mentioned the Iranian people, and they are the ones who suffer. But the regime from economic sanctions, but the regime itself does not suffer very much. And we saw that with Russia. We see it with Iran being under some form of sanctions for nearly 50 years now, that they find ways to work around it. And of course, all of these countries that have been under some form of sanctions from the U.S. monetary regime, financial regime, or otherwise, have been working as hard as they can to sanction-proof their economies through alternative markets, forming other trading alliances, BRICS or otherwise. And so I think that sanctions by themselves, or additional sanctions, will hurt only the Iranian people. And this isn't a conflict with the Iranian people. It's a conflict with the radicalized Islamist regime. So the people will suffer. The regime won't suffer nearly as much as we would hope. And like all sanctions regimes, it tends to backfire on the imposer of sanctions in terms of their own economies, their own financial position being damaged. So I guess what I would say is the problem that we're facing right now is not a lot of credibility, not a lot of diplomatic sway. We can't just use hard power all the time. And we've done a terrible job in this administration of really leveraging the soft power that the U.S. at least used to have in these situations.
And, yet, Michael, all the things that you would expect to move, as we touched on, haven't really moved in that way, at least not in the immediate aftermath to this attack. Defense stocks, for example, only rising quite modestly again on Monday. What did we have? Lockheed Martin rising about 1%. RTX, American multinational aerospace and defense company, also just about 1%. So if you're looking at this conflict and you're seeing what you're seeing, which is a Biden administration, which despite coming through in a way for Israel this weekend is still perceived as quite weak on the world stage, a Biden administration which has given Iran and billions of dollars, a conflict which, as you say, has ideologies pitted against each other, and a very precarious situation in the Middle East, as well as the timing of a politically divisive climate in the United States and the timing of the elections here. what is the position? What is the prudent portfolio positioning that one should be making at this juncture?
In my view, it is hard assets. So we've talked about some of those. It is gold, Bitcoin. It is the energy commodity complex, all of which are inflation hedges and in a way very, very sensitive to war and to conflict. It is short duration on bonds and fixed income. You're getting the yield that you need with lower risk and lower volatility. And it is avoiding, for the moment at least, some of the highest flying of equities, which have seen a pullback. Certainly, we've seen a pullback in tech and the Magnificent Seven AI type names, which, by the way, I think have a lot of long-term potential. I think AI is one of the few bright spots, productivity-wise, in the U.S. At the same time where, again, the current administration has really been hamstringing other areas of innovation and productivity growth, energy, mining, crypto, where the regulatory barriers are forcing these companies offshore out of the U.S., which is very negative for the long-term health of the U.S. economy. AI is a bright spot, but you have to really think about where valuation is and entry points. So in summary, hard assets, commodities, and equities that are going to be inflation resistant or sensitive and responsive in the context of conflict, short duration bonds.
All right. Michael, of course, we're watching this very closely, very carefully, as I'm sure you are. Thanks for making the time and joining us today. We'll check in with you again soon. Appreciate it. Michael Wilkerson.
Thank you.
All right. And as always, thank you for watching. From me, Michelle Makori, and the rest of the Kitco team. We'll see you again soon. Thanks again.